Hey everyone, this week has been absolutely seismic for the markets. I'm breaking down 6 massive moves you need to know. We've got Trump's US-EU trade win, and Powell's Fed pause with rare dissents. Then Samsung's huge Tesla AI chip pact and AMD's GPU price hike. Plus Union Pacific's massive rail merger. And finally, the high-risk, high-reward world of margin investing. Stick around to see which of these plays will make or break your portfolio.
Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Rob Farian. He's the CEO and founder of Flying V, our digital marketing partner. Rob, congratulations on the new office. I'd like to see you broadcasting from there. How are things going?
Yeah, it's been a crazy couple of weeks, Gary, but yeah, appreciate it. We're getting all nice and settled into our new digs here. So it's been a fun, frenetic pace over the last 2-3 months, right? But finally some finality, and we're getting situated here. So it's been a lot of fun to work with the team, collaborate with the team more on a day-to-day basis. So it's been awesome. But yeah, really excited about this show, Gary, because I know we are filming live or broadcasting live, I guess I should say. So to those of you that may be listening on X or LinkedIn, actually, I think this is playing on my personal LinkedIn, Gary. So I decided I'd test it there just in case there were any snafus, so you don't have to worry about that. But yeah, thanks to anyone that's out there that's watching. This is the 5 things from Deep Knowledge Investing, where we keep you in tune with everything you need to know in the market with what's going on, what's happening, and information you just need to be aware of. This week's version is called the More Trade Deals Issue. We're going to be talking about trade deals, obviously. We've got information about, obviously, the Fed pause and what that means for the market. President Trump and his good friend Jerome Powell, also one of Gary's favorite matches to referee. So we'll get into that. We're talking Samsung, Tesla, AMD, Nvidia, Union Pacific, Norfolk Summon. Holy smokes, we're packed with all sorts of information from those companies coming up. And then our educational topic that we'll close with at the end of the show. We're going to be talking about the risk and reward of buying stocks on margin, what that means, and how you can leverage that type of deal making. To get right into it, we're going to talk about our first thing. We're getting right into it with the More Trade Deals Issue. We're talking about the EU here. Gary, the US and EU reached a trade deal. Thing number 1, EU trade deal. What do we need to know?
So, Rob, I'm actually in Europe right now. And over the weekend, I went from Prague to Vienna, and then on Monday or Sunday rather, from Vienna to Budapest. And then later this week, I'm headed to Mallorca, Spain. And along the way, I talk to people, and one of the things that's terrific about Europeans, they all want to give me their view of economics, of President Trump, of everything going on. So it's really interesting to get their impressions of things. I don't think the newspapers are doing anybody any favors here. Really interesting to talk to the individuals. But going to the data, the US and the EU reached a major trade agreement. Last week, they're rebalancing the relationship between the world's 2 largest economies. After months of negotiation, the deal has laid the groundwork for tariffs, market access, and economic cooperation. The U.S. is going to charge a 15% EU export tariffs on most products. There are some exceptions, with tariffs on American goods dropping below the current average of 1%, right around 0. Additionally, the EU is eliminating all tariffs on U.S. industrial goods exports. That's a big win for President Trump. He's doing everything he can to try to increase the amount of U.S. manufacturing that's happening. And there also are some aspects of the deal where Europe is going to be buying a lot of U.S. products. This deal represents a dramatic change in transatlantic policy. Prior efforts have made 0 progress. This deal put purchase commitments in order as well, securing EU plans to buy more American products, reducing the increasing deficit with the EU. And worth noting, there's some valid criticism. There are a lot of people who believe the EU doesn't have enough demand to purchase the promised energy commitments. I think they promised something like $750 billion. And people have pointed out, wait, is the EU actually using that much? Can they buy that much? So it's possible that there will be some disappointments along the way, and that some aspects of the deal are going to be renegotiated or adjusted by the time they're on the final paper. But I think the deal looks like a big plus for the United States right now, and that seems to be the takeaway for a lot of people as well.
Yeah, it makes sense there, Gary. Obviously, we'd be interested on your thoughts. Yeah, is that supply there, right? Or is that necessary from the EU? But then also, I think I was watching as well, the deal is a little bit different, I think, than some of the leaders were expecting. So help us shake through that, right? What did this deal actually end up looking like versus what might have been expected?
Yeah, so the general sense of this is this was a very one-sided deal, very much to the advantage of the United States. The United States has a gigantic trade deficit with the EU, and so President Trump said, "Look, you guys," and people will say, "Well, wait, is it all tariffs?" No, part of it is the EU for a long time has had tariffs against U.S. products, but in addition to that, there's all kinds of help and support they provide for their own industries. Last month we pointed out that when central bankers were meeting in Sintra, Portugal, which at the time was like 20 miles from where I was in Lisbon, these wow, that is some serious typing there. You are zipping along. Anyway, these central bankers, they gave a round of applause to Jerome Powell, who said, hey, we're not lowering rates because we're worried about we're worried about potential inflation from these deals. But they gave him a standing ovation for that, but completely forgot somehow that their economies have some pretty giant tariffs, which somehow they're okay with. So President Trump was making a big effort to balance things out. A couple of weeks ago, I praised DKI's interns for writing that President Trump was monetizing access to the U.S.'s huge consumer market. Guess what? He completely nailed it. Some of the some of the European trade negotiators basically said that they were trying to contain the damage. The article in the Wall Street Journal noted that tariffs of 15% are certainly a challenge for some. That quote came from European Commission President Ursula von Leyen. But she said we should not forget it keeps the EU's access to the American market. So, I mean, that's really the big news here, that the United States has these big trade deficits with all these countries, and President Trump is saying, you know what, you want access to the U.S. market? Enough. We need to have production here too, and he's successfully been enforcing that. So that's what's happened there, and countries are rolling over saying, you know what, we don't want to lose this business. We're afraid of being excluded. And, that's why things came out very much in favor of the United States.
Yeah, Gary, I think that's perfect segue. And apologies if the typing has come through, but I was noting this into our second thing, right, is the Fed decision, right? And so that came out last week. Fed decided to pause. That will be the second thing. So just not to ruin Gary's thunder there. But we've had this battle between President Trump, Jerome Powell. Trump has obviously put pressure on Powell to lower rates. We've had the meme, which very much so meme-worthy press conference with President Trump and Jerome Powell. But the Fed stayed paused, right? We've obviously been talking about that in the past and saying, hey, inflation's not under control. We need to keep the rates where they're at. Talked to a few people over the weekend that said, this Jerome Powell guy, lower rates. Looks like, though, things might be shifting on our side or DKI position, Gary. So I'll say no more. Thing number two, the Fed stays on pause. And then what does this mean for what we've been talking about over the last, 12, 18 months ad nauseum?
Yeah, so Rob, the Federal Reserve concluded its July meeting. They surprised nobody by leaving interest rates changed. I thought it was the right move, or at least I did until the employment report on Friday came out. The big news on the employment report wasn't just that the 77,000 new jobs were relatively low. It's that there was a massive revision to the prior couple of months. People seem to be upset about the fact that President Trump fired the person at the BLS, the Bureau of Labor Statistics, who compiles this. Like, oh my God, how could he do this? My question is, oh my God, how can the BLS have numbers that are so unbelievably horrendous that the revisions are 2 to 3 times the actual number? I mean, that to me is the incredible part of it. In general, the overall economy seems to be doing well enough, and inflation remains above the 2% target, which I continue to insist is 2% too high. For those of you who disagree with me, feel free to put it in the comments, but here's the deal. The Fed's mandate is stable prices. 2% inflation is a way the government steals from you through a process called seigniorage, but that's how they steal from you slowly. I don't want the government stealing from me at all, quickly or slowly. I've been outspoken and out of consensus for the last, 4 or 5 months and saying that Trump tariffs would not lead to disaster. But I do think the insistence of some that it'll take a few more months for tariffs to work their way through the complicated supply chain and potentially lead to higher inflation. That's a reasonable concern. It hasn't happened yet, but that doesn't make them wrong yet. Jerome Powell continues to provide a measured presence. He's talking about the good and the bad of the economy. He's always highlighting uncertainty, which President Trump loves, being a little sarcastic there. I think the big news is that for the first time in decades, the normally unanimous Federal Reserve had 2 governors voting against the no change in policy decision. Now, people are debating, right? So they're debating, did these 2 people dissent because they think it's time to lower rates, or did they dissent because they're trying to impress the president with their accommodating stance and are eager to replace a soon outgoing Chairman Powell? That's unknown. We can't know why they're doing it. But I do think it's interesting that, more and more of these Fed governors are dissenting. I think they'd like to have the big chair. Who wouldn't in that position? There are also a lot of people talking about the political aspects of this and saying, oh my God, there's more dissent. Hey, I think that's a great thing. I've long thought it was very disturbing that everybody in the building at the Federal Reserve somehow agrees there should be dissent. The economy is complicated. There are reasons to have discussions and debates, and always providing a unified front. I get it. That makes people feel secure, but I want to know that there's discussion and debate. That's what we do at Deep Knowledge Investing. I'm okay with people dissenting for whatever reason and then explaining their reasons. And that's where we are right now. So people seem upset about it. I'm okay with it.
Yeah, and I mean, I think, Gary, there's just a lack of understanding of how all this works, right? From the general investor, just the general individual, in terms of how the Fed fund rate works. I know we're going to talk about that a little bit as well, but then just what that control is, but then what it should be doing as well, right? I think now on the flip side of this, you're seeing, okay, President Trump and lower rates, lower rates, lower rates, and he's turned Powell into this just enemy that everybody has now mob mentality around, right? And that's obviously President Trump's way of negotiating, doing deals, leverage, all of those things, right? But in reality, I completely agree with you, right? Here at DKI, we've been saying this for the past how long, right? So when you have all this noise and all this fluff that you see online and all these headlines that the media wants you to think, none of it really matters, or I don't think sometimes it matters. And then you have these revisions. Same thing was happening with the jobs report during the Biden administration, right? And we would see these numbers and just absolutely laugh at them because they were arguing for this economy. But when you really looked at it, bifurcated economy like you've talked about, right? Some people doing really well, a lot of people doing really poorly. Jobs, yes, growing, but only for the public sector, not for the private sector, right? Like we've talked about. So that's what I wanted to ask is, this fight between Chairman Powell, President Trump, it's good for the headlines. We like making the memes of them. They remind me of the Rock'em Sock'em boxers.
Exactly,
right?
yeah.
If someone needs to do a toy, that thing would sell out off the shelves. But my question, Gary, is like, does any of this matter at the end of the day? Break that down for me.
Not even a little. If for everybody spilling tons of digital ink on this stuff, I suggest you view this like an economic reality TV show, right? I mean, that's really the way to do it. So look, let's address some misunderstandings here. A lot of people believe the Federal Reserve controls interest rates. That is not true. The Fed only controls the overnight rate. The Fed funds rate is the overnight rate for banks. The bond market sets the rate for the rest of the yield curve. Now, some of you might say, okay, right, but the rest of the yield curve gets set off of the Fed funds rate, and the answer is only sometimes, right? And so let's talk about why I think none of this matters and why my position on rate cuts is completely unchanged. It's because they're going to have no effect. Last September, when the Federal Reserve cut rates in a futile attempt to lower borrowing rates, the yield on the 10-year Treasury rose as the market priced in expected higher future inflation. So we had an inverted yield curve, meaning short-term rates were higher than long-term rates. That's unusual. That's why it's called inverted. But the yield curve uninverted itself and became a regular yield curve in exactly the way the Federal Reserve didn't want. They lowered short-term rates. They lowered the overnight rate by 100 basis points. It's just a fancy finance way of saying 1%. Well, guess what? The yield on the 10-year Treasury rose by 100 basis points. That's the opposite of what they were trying to do. So I think the real issue is inflation is being caused by congressional overspending. Basically, this spat between President Trump and Chairman Powell, it's just a reality TV show. And it's the only way to look at it, I think. I also think everybody is wrong on this. I think President Trump is wrong to insist on a lower overnight rate. I don't think it's going to help his cause. It also makes it look like the Fed is being political. More on that in a second. I think Chairman Powell has been wrong on inflation for years. He kept the Fed funds rate far too low for far too long. He was late in hiking and early in easing. So I think they've been wrong. And then the press has been wrong on all of this. People are saying, oh no, this is causing people to view the Federal Reserve, which is supposed to be independent. They're viewing it now as a political institution, and President Trump has turned the Fed into a political institution. What in the world? What are you kidding me? It's always been that. And if you think I'm wrong, let's go through some historical examples, right? It was the Federal Reserve that made the massive spending plans of FDR possible when he created the New Deal. That was a huge amount of spending. Who do you think monetized it? Then we go later, right? President Johnson, the Great Society. Okay, again, more spending there. And if you think that wasn't political, President Johnson famously picked up then Federal Reserve Chairman Arthur Burns and slammed him into a wall, literally strong-arming him into lowering rates. Tell me it's not political. Then President Nixon had to decouple the United States from the gold standard in 1971. Now you could say, wait, that was a horrible move. And it was a horrible move, but the reason he had to do it is because we'd spent so much on the New Deal and the Great Society and all of this spending, we didn't have enough gold to cover the dollars. It was the Federal Reserve who made this possible, okay? And then, we go, how about to last September? It's not a secret that everybody at the Federal Reserve despises President Trump. And I wrote back last July, last August, and last September, if the Fed cuts ahead of the November election, it will be seen as political. It'll be seen as Jerome Powell, Chairman Powell, trying to help his preferred candidate win the election. Well, guess what? That didn't work, because he lowered, but what the Democrats, the incumbent party at the time, needed was they needed lower long-term rates to goose the economy. Well, they didn't get that. It's because the Fed is irrelevant right now. And so basically, we've had decades and decades and decades of the Fed being a political institution. President Trump, I disagree with him being out in public trying to strong-arm Powell and strong-arm the Fed. It's a bad look, but this is the thing now that's made the Fed a political institution. It's always been a political institution. The Federal Reserve exists specifically so that we can monetize debt. Right? I mean, it's there to create the ability for the government to spend more. It's always been a political institution.
Yeah, hashtag end the Fed. Gary's all about that train.
Love that.
For sure. Yeah, love that. And Gary, you're exactly right. I mean, it's kind of the inverse of the boiling frog analogy, right? Except we've been keeping these low, suppressed interest rates for far too long, when in reality, there should have been some raises and upticks over the course of the last 10 to 15 years. And yeah, this has been politicized since day one, of course. But as you mentioned, with concrete examples, that's been going on for a very, very, very long time, far before President Trump. But then on in the flip side, yeah, disagreeing with how this is playing out. So Gary, appreciate you being able to look at things from both sides and provide an honest opinion. So, and if you disagree, we love that. That's great. Please give us a thumbs down. Tell us how bad this show is. I think we're going like the anti instant gratification at DKI. Just do things inverse here. So, but yeah, leave us a comment. Let us know what you think. Ask us a question. Would love to have some discourse in the comment. Head over to our website, deepknowledgeinvesting.com. You can sign up for a free newsletter subscription, and then we have a monthly premium subscription that runs $100 per month. Access to the entire website, non-gated content, as well as, most importantly, the current portfolio recommendations for deep knowledge investing. Gary, moving forward, keeping things going on this beautiful Tuesday morning. Markets are opening up. Us on the West Coast just rolling out of bed, I think. I know everyone's been calling me lazy lately, so got to figure out how to shake that stereotype. But Gary, moving forward, talking to Samsung, I feel like no 5 things goes without a segment on AI. So here we are again talking about a big AI chip deal. Tesla is another name, actually. So those of you Tesla fans out there, you're going to want to listen into this one. Gary, thing number 3, Samsung lands a $16.5 billion AI chip supply deal with Tesla. Tell us what we need to know about this deal between Samsung and Tesla.
All right, Rob, moving off of the controversial stuff, the Federal Reserve, President Trump, trade deals, the stuff that makes everybody crazy, we got one here where everybody wins. Samsung secured an 8-year, $16.5 billion contract to manufacture Tesla's next generation A16 chip at its new Texas fab plant, set to begin production in 2026. Hard to believe that is just next year. Those high-powered chips are going to power everything from Tesla's autonomous driving systems, Optimus humanoid robots, its AI data centers. Elon Musk confirmed Tesla's involvement and stated that actual production volumes could exceed the baseline figure, so maybe more than $16.5 billion. He's also emphasized that Samsung has agreed to let Tesla assist in optimizing manufacturing efficiency. That's an area where Samsung does need some help. Their foundry business has been pressured by yield issues and weak customer traction. This helps Samsung gain vital credibility and production scale. And they also secure a domestic AI chip supply chain. It gives them leverage over timing and cost control. Love the deal. It's a win for everybody involved. And like to see, the reason Tesla trades at a valuation far above auto manufacturers is specifically because people are saying, wait a minute, there's all kinds of there's AI, there's the autonomous driving, there's the potential robot business. Well, guess what? These chips are going to power it.
Yeah, Gary, on that point, real quick before we get into more specifics, I'm curious, you've always been, I wouldn't say a bull to Tesla, right? But you've never also been a bear to Tesla, but you've never been a Tesla bull either, right? I think somewhere right in the middle. I mean, what does this do for your opinion of the business? Maybe not necessarily the stock. Just walk me through, though, at least how you're thinking about this, or does it even have any effect on the way you think about Tesla the business, Tesla the stock, Tesla the investment?
So it's a great question, Rob. Tesla is clearly facing an enormous amount of competition in the electric vehicle market. There's a lot of Chinese competition coming on board. Like I said, I've spent the last couple of months in Europe, and I'm seeing huge numbers I've seen some Teslas, but I'm seeing huge numbers of non-Tesla EVs. They're primarily produced in China. So there's a lot of competition there. But the stock hasn't gotten hammered specifically because they have all of these other ways to win. They're all, the Tesla fans are saying, yeah, the auto business is great. We like that. That's exciting. But there's other stuff too. And like we said, autonomous driving, robo-taxis, these potential robots. So I think it's a win for them. I also think it's a big win for Samsung. This is validation for its foundry pivot. For Tesla, it gets them supply while avoiding traditional vendor lock-in with firms like TSMC, that's Taiwan Semiconductor. And then the final thing, I also think it's a win for the United States. Look, Taiwan Semiconductor has been a huge benefit to the United States. They are clearly the best chip maker in the world, and the U.S. buys huge amounts of chips from them. But this Samsung plant in Texas is going to be very high end U.S. capacity. That's exciting as well, and it's great to have supply from Taiwan, but it's really nice to see us shore up domestic supply chains. Like I said, I think it's a win for the United States, for Samsung, and for Tesla. I like it all the way around.
Great. Yeah, love to see that. Win-win-win deals. There's no reason at a deal. I was talking to somebody about this the other day, right? It's like sometimes there's this negative connotation towards deal making, right? That there has to be a winner and there has to be a loser. And so when you have that, you just have a very chaotic situation, negative situation, right? So I think it's like, hey, if you're coming to the table expecting to get a deal done, right? Or you have a positive mindset, you're working towards, hey, how can we, make everybody win in this situation? Then deals can be good, right? Deals can be really, really good things, and everybody can win across the board. Let's keep it going on this beautiful morning. Well, actually, Gary, where are you again?
I'm in Budapest right now, in Hungary.
Okay.
Yeah, so it's a little after 4 o'clock in the afternoon here.
There we go.
Yeah, exactly. And then on Friday, I'm headed to Mallorca, Spain.
Okay.
And I actually spent the weekend in Vienna, in Austria. Went to an amazing art museum there, and lots of great classical music. It's been a very highbrow kind of week for me.
Nice. That's awesome. Yeah. And we were actually trading some notes. Anton, special shout out to him. He's been a huge help for Deep Knowledge Investing YouTube channel, YouTube at a bunch of different stuff, right? All over the place. So, and he's based in Vienna, studying there at the University of Vienna. So, yeah, we're really happy to have him as a part of the team. Yeah, go ahead.
By the way, I have to tell you something. Vienna, I have never in my life seen a place that clean. Every time I go there, it looks like the whole place got power washed last week.
Yeah.
Like, the buildings are immaculate. You couldn't find a gum wrapper on the ground. Like, it is just immaculate. They're really amazing.
Yeah, very good. Yeah, that's what Anton has said. Just he's loved the city, so he's actually not from there, so studying there, but has really enjoyed it. All right, Gary, keeping things moving forward. We're now talking AMD, talking Nvidia, right? So we've got a clash of titans here. Thing number 4, Gary, AMD raises the price of GPUs, confident in competing with Nvidia. Hey, love competition, but we're talking about an absolute behemoth here. What do we need to know between these two big manufacturers?
Yeah, so Rob, there is no question. Nvidia is the market leader by a gigantic margin. AMD, they've been good in the gaming GPU market, right? So if you're a gamer, chances are, a PC gamer that is, chances are you may want like an AMD CPU or even an AMD GPU or both in your rig. And that's great, but they also have a flagship AI processor. That accelerator was priced at $15,000. Well, guess what? AMD just raised the price to $25,000. That's a 67% increase. The price still comes in well below NVIDIA's closest related GPU. But AMD has a history of undercutting NVIDIA on price, so the news came as a little bit of a surprise. AMD's price hike suggests increasing demand and higher confidence that buyers are going to pay more for the hardware. Look, they didn't do this because there isn't demand, so good for them.
Yeah, definitely, Gary. Of course. I mean, what does this mean, though? I mean, is it a Chihuahua barking at the pit bull, right? Or is this a situation where we think AMD, has any fighting chance in this AI arms race We called it Raising the Stakes of AI in the written version of the 5 things. And then again, pick your fighter, rock'em sock'em fighter, AMD, Nvidia. Who do you got, Gary?
Yeah, so look, in this particular fight, it's very clear that that customers are willing to pay up for Nvidia. I don't think, from Nvidia's point of view, AMD raising their price from $10,000 to $15,000 is going to make a big deal. There are Nvidia chips that are selling for something like $50,000 or even more at times, depending on supply and demand, or whether you're in the gray market, all kinds of things like that. Here's the issue. AMD thinks its performance and growth warrants these price hikes, and the demand remains there at higher prices, and that might be true, but I don't think that's the big issue. Because what people are used to evaluating is more what's happened in the CPU market, where Intel and AMD fight it out over the x86 architecture. They share kind of the same bones. And so, basically, depending on what your needs are, an AMD processor-powered CPU is going to perform roughly similar to an Intel one, right? Again, they're both on the x86 architecture. Now, in general, the Intel ones tend to be better for business multitasking. The AMD ones tend to be better for like single-use gaming. You'll get you higher FPS, frames per second. But AMD is facing a bigger issue when they're facing off against Nvidia, and that's vendor lock-in. And the reason for that is Nvidia has this proprietary CUDA instruction set, and that's the industry standard. And what that means is AMD customers either need to use AMD's unfamiliar instruction set, and that's more difficult, and their chips aren't as good as the Nvidia ones, or if you're a customer, you need to use an emulator, right, that will make the AMD chips perform like the Nvidia's CUDA instruction set. But the issue with that is that emulator degrades performance, and so there's just a huge amount of vendor lock-in. Nvidia has been really good at having this proprietary instruction set that makes it just really hard. Anybody on the Nvidia system, it's really hard for them to go buy from somebody else, and you need to run parallel systems. And it's not that it can't be done, but there's a reason Nvidia has been able to maintain so much market share. Part of it is the best product in the world, but part of it is this other lock-in issue.
Yeah, definitely makes sense. Actually, funny, we were talking to Parallels, the group, the other day. They were just looking into some digital stuff, but yeah, it was funny to see that name pop up in the market. And yeah, having to run that, it's not the most fun thing to do, no matter what device, one way, what you're doing it on. So, Gary, moving forward, or before I do that, be sure to head over to our website, deepknowledgeinvesting.com. Check out the Ask Gary feature. So right at the top there, hit Ask Gary. You can submit a question. Some of these topics or educational things that we talk about on the show come directly from subscribers, viewers, watchers. Again, thank you so much for joining us. We're doing this live, 7:25 a.m. For me here on the West Coast, sitting in Orange County, California. Beautiful day out there. Hope the market's treating you well as we get underway this week and into the rest of the week. This show's designed to just keep you in tune with everything that's going on in the market. So every Tuesday, 6 o'clock, or a little late today, we had some technical issues. We generally get this out Tuesday morning. Well, I guess actually, Gary, now that we're doing it live, we are getting it out Tuesday morning, right? So I'm trying to get myself through logistics. So
there we go.
In the past, we would get this out on Wednesday morning, or Tuesday mornings, film on Monday. So yeah, we'll see if we can be getting this thing first thing Monday morning out there and live to you guys, getting you all the information that you need to navigate the markets and what's going on, and getting you caught up to speed in the day-to-day grind. All right. Whew. That was a lot. Didn't plan on that. Normally, I'm just right into my promo reel and got it all dialed in, and then realized, wait a minute, that's going to be all wrong now that we got a hopefully live audience. few but mighty, right? Gary, is what we're starting with. So thing number 5, Union Pacific. I don't know that we've talked maybe once or twice here on the show before. It's always fun to see new name, new segment make its appearance on the show. We're talking them as well as Norfolk Southern and a merger here. Very interesting. Obviously, two of the biggest names, biggest players in the rail space. Gary, thing number 5, Union Pacific plans landmark 85 billion, just hard to comprehend that, transcontinental merger with Norfolk Southern. This is a mega deal. What is the White House saying about this?
Well, let's just start with the basics first. Union Pacific and Norfolk Southern unveiled a joint agreement on July 29th to merge. It is, as Rob said, an $85 billion deal. It combines Union Pacific's Western network with Norfolk Southern's Eastern network. It will become, assuming the deal is approved, we'll get to that in a little bit, the first coast-to-coast freight railroad in U.S. history, the first transcontinental railroad that we've ever had. Just to give you a sense of the scope here, the combined route system spanning over 50,000 miles across 43 states, connecting roughly 100 ports and 10 international exchanges. Union Pacific projects $2.75 billion in annualized synergies. The combined EBITDA here would be about $18 billion, free cash flow of about $7 billion. The merger is planned to close by early 2027. There's going to be some antitrust concerns. We'll get to that in a minute. But the upside on this is, first of all, anything that's traveling on rail tends to be cheaper than traveling via trucking, right?
Yep.
The second thing is,
much cheaper.
It also means that our roads won't be so congested, right? That's the real issue there, right? We've all been on the highways and just seen tons and tons of these tractor trailers. Don't blame them. They're shipping, for demand. We all order stuff from Amazon. This is how it gets to us, right?
Really? Gary, that's how that works? I thought just magically, it just showed up and I got this Uber just pops up out of nowhere. You're telling me that's not leading to a lot of other issues down the food chain?
Yeah, people hilariously want the convenience of internet purchases and packages delivered to their doorstep. I get that. That's how I order too. But they want that combined with no traffic on the highways. That's not going to happen. So one of the key things to point out is if you want to ship, say, from New York to California, maybe we should use other examples. People on the coast have been accused of thinking there's nothing in between. That's that's a really unattractive.
Gary, we are already hated by many, loved by few. So can you not make it any worse?
Yeah, I know. Listen, as somebody who grew up in Michigan, I've never been a fan of the term flyover state. I think it just makes people look really stupid and provincial, but here we are. Anyway, if you want to ship from one end of the country to the other, maybe say from Boston to San Diego, that'll be better. Or Boston to Seattle, say. The issue is that, if you're on Norfolk Southern, at some point you reach the end of their rail line and then you have to switch. And every time you have to stop and realign the trains and realign the cars and switch, not only are there extra costs, there are delays. And for a lot of these products, especially with just-in-time inventory, it's not just the cost of doing business with two different railroads. The that delay becomes expensive, right? It means you have to carry more inventory. It takes longer to get things from one place to another. This merger is an attempt to address that. So that's the upside there.
Yeah, very interesting. Gary, obviously my question is going to be centered around antitrust, right? You're talking about, two massive organizations combining that more or less. Yeah, I mean, there's a chart actually that we have in the written version, right? It shows the Western rail and then you've got the Eastern rail routes, and you basically combine the map, right? And it fills out the entire map to where when you think about monopoly, if there was a way to put it in a picture, that's what I would imagine it would look like, or at least everything else was few and further between. So yeah, Gary, what does this mean, right? Antitrust, what's the government saying about it? White House, has President Trump chimed in on this? Is this deal going to go through?
Yeah, so it's a really good question here. Look, the upside is eliminating those redundant interchanges, notably around Chicago. We talked about expanding intermodal flows, reducing transit times. These are all upsides, but those efficiencies are going to come with an antitrust cost. And again, Rob, you're correct. If you look at the written version of the five things, I'm taking a look at this map right now. The Union Pacific route map is basically the western 2/3 of the country. The Norfolk Southern route map is the eastern 1/3 of the country. Right, so it's when you look at this, it's very clear there are antitrust concerns, because what will happen is if you want to ship from coast to coast, they would be your only option. And when that happens, I wouldn't count on customers getting better pricing. And so this is going to be a gigantic antitrust fight. Now, there's a really interesting question about what the Trump administration and what the regulators are going to do with this. Early on, it looked like the Trump administration was going to be a little more, they were going to challenge more of these deals, and they were going to be a little more strict on antitrust. And basically, I thought that was a good idea. Now, recently, it looks like they've been a little more lax, and I'm hoping that's not the case. I think, if these companies want this deal to get done, they're going to have to agree. They're not going to be able to agree to divestitures, because the whole point of this is putting things together, and there isn't really a lot of overlap. But I think they're going to have to agree either to some sort of pricing based on what it would cost you to go on dual networks for somebody else, or alternatively, they may have to agree to let some of their competitors use their rail lines for something like this. Now, I'm not an antitrust expert, I'm not an attorney, but to give you a sense of what the companies think, we are roughly in the middle of 2025, and they're saying they think the deal can be completed in 2027. Well, an 18 to 24 month get it done window is gigantic. That's really long. And the reason is this thing is definitely going to court. There are definitely going to be there's going to be an antitrust fight and some sort of accommodation. It's way too early to tell what it's going to look like, but I would be looking for the combined company to make some sort of either pricing or accommodation, meaning providing their competitors some sort of, routes on this. We'll see what happens over time. I'm hoping that the Trump administration doesn't just roll over on this and allow it. I think they need to extract some sort of concessions on it.
Yeah, makes sense. Yeah, and you can see why, Gary. But obviously, good things can come of this as well in terms of convenience, moving product coast to coast, or wherever you may need to in the middle. This week, we're going to wrap it up with an educational topic. So generally, we're only doing 5 things. So today, by listening to the show, you're getting, I think, 20% more value, right?
There you go.
With my number. Thanks, Gary, for checking my math.
Nailed it.
This is the more trades deal issue. Our educational topic, we're talking about margin investing, right? So yeah, you've always been in those group chats or seen the guy. Yeah, I gotta get off the margin here before I make any other moves, right? Everybody's got that friend. So Gary, but it obviously exists for a reason. There's risk reward that comes with utilizing margin, and that's what we're gonna get into right now. On this week's version of the 5 things to know in investing this week, the more trade deals issue. This week, we've got 6 things, just so much going on. Gary, our 6th thing, understanding margin investing. Gary, let's start. What is it? What do we need to know about it as a baseline?
So, Rob, I remember many years ago, I was talking with someone close to me who was day trading just enormous amounts of stock, like literally 7-figure trades. He was day trading all of the stuff. And he told me he was so excited because he discovered his brokerage had this thing called buying power, and it let him buy more than the money he had in his account. He's like, this is phenomenal. I'm like, okay, that you did not discover anything exciting or phenomenal. You're just borrowing money. You're just using leverage. Okay, let's unravel this for people. Let's use an example. Say an investor has $10,000 in their account, and let's say their broker has a 75% margin requirement. Now, For clarity, your broker is going to have a different margin requirement on each security individually. On some securities, they'll be 50%. On others, it'll be 100%, right? It's going to differ depending. But let's just use, a simplified version and say your broker has a 75% margin requirement on your $10,000 account. What that means is that investor's purchasing power can increase to $13,333, right? So you can basically get 1/3 more. You can take on larger positions. And if those positions increase in value, the investor would profit from the full $13,300 exposure. That would enhance your returns. But remember, you have to pay interest. On the other hand, if those stocks decrease in value, that loss is equally amplified. Okay, if the loss is great enough, that investor is going to receive a margin call, which forces them to either deposit more money or sell off assets to restore the account to the broker's required level. This is something that we talked about in last week's version of the 5 things, right? When we were talking about meme stocks, GameStop in particular, where the shorts just got destroyed because they had margin calls. Okay, now let's just talk about 3 hypothetical examples and how margin investing would affect your returns. Now, let's say in this hypothetical example, it's exactly what we said before. You got a $10,000 account, a 75% margin requirement, which means you could invest as much as $13,300 of different securities. Okay, if your return is positive, then that's a win. Instead of earning a positive return on $10,000, you'll be earning a positive return on more than $13,000. You will make more money. Great. Now, let's say your investment return is neutral, right? You don't make any money, you don't lose any money, but you have to pay interest on that extra $3,333. That interest expense means your returns are going to be a little bit lower, not awful, but it's going to cost you a little bit. But here's where you can really get crushed. That's if your returns are negative, because in that situation, you will lose money. You'll lose money on a larger pot of capital, right? Instead of losing money on $10,000 of capital, you'll lose money on $13,000 of capital, and you have to pay interest. So in a situation like this, what you want to do, it's okay to use margin for both long and short positions, but ultimately, what you want to do is realize that margin can get you higher returns. It's also powerful enough to wipe out your capital really quickly. Again, especially true if you're shorting meme stocks. The key thing here is that there are lots and lots of moving parts here. What you want to do is act like you have to make sure that you've done your research, right? Or subscribe to a firm that does their research. I know one that I'd recommend. But the point here is, if you're taking that much risk, you better know what you're doing. You have to know your investment thesis, your reasons for it. I wouldn't be doing stuff like this because a guy had a stock tip, right? You're taking on a lot of risk there. This isn't the area where you just want to whip it around because somebody in a chat group said, I like ticker XYZ. That's really dangerous. So if you're going to do this, it's okay to do, but just make sure you have research and that you know why you're taking these positions.
Gary, so my question, especially initially when I was introduced to margin investing, was the interest, right? So it was confusing, looks like, and even our chart, I would say, it looks like, hey, the only interest applies if it's neutral or negative in terms of the position and then the interest, right? Can you just talk about how that interest works, what that interest rate looks like, and then how it is factored in across wins, losses, and stuff in the middle?
Yeah, so first of all, what they told you is 100% not true. You have to pay interest on any money that you borrow. In this example, if you have $10,000 in your account and you want to invest $13,300, you are going to pay interest on the $3,300 that you've borrowed. So there's no way around that. Now, what the interest rate is will depend on your relationship with your brokerage account, with your prime broker. Obviously, the big hedge funds, they have favored terms. They can use more leverage and have lower interest rates. Life's not fair. I don't know what to tell you on that. That's just the way this stuff works. If you are an individual, make sure you check the margin rate. Because I guarantee you it will be higher than the money you're earning on cash in your account. And I can tell you, as a personal example, I use margin that I want to have larger positions in some of the names that I like. Every now and then, somebody at my brokerage firm calls me and says, hey, I noticed you've got cash in your account. If you want, we can put that in a CD or buy treasury bonds for you, and you can earn a higher return. And I say, hey, guess what? I need that to cover margin. So if I were to take your course of action, maybe I'd earn 3, 4, 5%, but you're going to charge me, 8 to 12%. It's going to cost me money. Did you think about that? Like, oh, that's a good point. I didn't look at it. Why these guys don't or can't, I don't know. But if you get that phone call, make sure make sure you understand that whatever interest you are paying your bank, your brokerage firm, your prime broker is going to be higher than the rate that they pay you on your cash balances. So if you're going to do this, make sure you know your investment thesis very carefully. Make sure you know what you're doing in terms of have an investment plan. Know why you're investing. Don't do this just on a tip, and know what the rates are. And if you don't know or it's confusing, just call your brokerage firm. They'll tell you, or it's published somewhere. It'll be, on your account. This is not information they're allowed to hide from you. If you call and you don't get a straight answer or an accurate answer, then you need to change. Do not stay at a place that won't give you a straightforward answer on stuff like this. This is basic information. You deserve to have it. If you're going to use margin, you should know what you're paying.
That's why those guys get paid the big bucks, Gary. That's why.
Yeah.
That's why. So that concludes this week's version of the 5 things to know in investing this week. My name is Rob Farian, CEO, founder of Flying V Group. Gary Brode, always a pleasure doing this with you. Gary's managing partner of Deep Knowledge Investing. If you weren't with us at the beginning of the show, again, we'll be doing this every week. Trying to get Mondays, 6:30 a.m. I think is what we've been talking about. Maybe throwing that around, get that out for the opening bell to kick off the week would be a lot of fun. Head over to our website, as we mentioned, deepknowledgeinvesting.com. Sign up for a free subscription. That'll get you access to email list, all of the content that does go out. Some of that will be gated. You can unlock that content with a premium subscription, $100 a month. Actually, I think we had one of our first YouTube sourced subscriptions, which has been fun to see people from that community start to join. So hopefully, obviously, build a community here on X as well. I know, Gary, you're very active on X, LinkedIn as well. Trying to hit you on all these different platforms where you're at. I think even podcasts, hopefully we'll have here coming up in the next month or so as well to get it on whatever medium you want it on. Gary, turn it over to you. Final closing thoughts before you do, though. Just want to say again, thank you. This has been a fun week, 2 weeks. I feel some momentum. I'm encouraged by our progress and just excited to talk about the future, what's happening in these markets, and always trying to stay ahead of the curve. And I appreciate you and everyone on your team. I know there's a lot of work that goes on behind the scenes to provide us with this great information, to put us in the best position you possibly can to help guys like us succeed in the market. Because it's a market, as you know, infested with sharks. So Gary, I'll turn it over to you for your closing thoughts.
Thanks, Rob. I appreciate it. And one thing I want to be really clear about, there are a lot of people selling different things, different positions. Anything I talk about, my personal portfolio reflects these opinions. I might be right, I might be wrong, but over time, we've been much more right than wrong. But the key thing is, anything we're talking about, my personal portfolio, my capital is invested in a way that is consistent with what we're talking about on this show. A few people that I want to recognize for this week. First of all, our young interns. Wow, what a great week they had. Cash and Crow, Samak Jain, and Gideon Rodham. These guys were competing madly early last week, all pinging in with different ideas, and it was almost like they were running this big competition to see who could get their ideas approved and in the 5 things. That's why we had to go long this week. We had an extra thing. Good for them. Love to see the aggressiveness, the intensity, the intellectual commitment that they've got. It's almost like somebody lit a fire under their butts this week. I have no idea how that could have happened. But good for them for responding in the way that they did. I'm proud of all 3 of them. I get to be the person up talking here, but please know that our young interns do a huge amount of the heavy lifting for the show. They do the research, they select topics, they pitch things, they do the image generation. So good for them. Round of applause for them. They are all three of them, meaningful contributors to this. Rob, I want to thank you and the team at Flying V. You, Nazim the Dream, Anton, Jonathan, Alex. Again, I get to be the one talking about this stuff, but, the things that you and your team have done to not only promote the show, but improve it, distribute it. This wouldn't be happening in the way that it does without you and the team at Flying V. For people watching this, if your marketing firm or your partners don't have that level of commitment, then, maybe look for somebody who does have that level of commitment. Worth pointing out, Rob is the CEO of a growing firm. He does this show with me personally. This is his time, his effort. So thank you so much. I really appreciate it, Rob, and the team at Flying V. Not just you, the whole team. You guys are phenomenal. Finally, and most importantly, for those of you watching this show, thank you. We know your time is valuable. We appreciate you spending it with us. We'll look forward to seeing you next week. If you want to give us a like and subscribe, that would be great. But hey, do what you want. We're not the boss of you. We'll see you next week.
Thanks, everyone.